GM, my dear friends, welcome back to the Worldwide DeFi Show. This is Nurstar speaking, and today is Wednesday, the 15th of October. So, my friends, welcome back. As we missed a couple of episodes, so we missed the Fridays and the Mondays episodes. I've been very busy, and obviously, a lot of things happened during these 5 days. And so obviously, as most of you know, we had a big crash. A big, beautiful. I don't know if we can consider it beautiful, but big indeed, and also very quick, very fast. So, and that happened during Friday evening, I would say, during the night as well. But it was a very sudden crash. And so if you have a look at today's prices, today is Wednesday, so also the markets managed to rebound a bit since the crash, but we still have most assets down, around 9, 8, 10%, between like 5 and 20% for most major assets. And during these episodes, we are going to speak about this crash to analyze it. We're going to analyze it, and so it's gonna be a quick episode, and we're gonna focus mostly on what happened during the past week, right? So during the weekend, how the space reacted to this crash, the reasons why the crash happened, how did it happen, and stuff like that. So we won't cover a lot of news today, except from these ones. So let's get started by having a look at the total crypto market cap. So here you can see, guys, that on Friday we went from opening at 4.10 trillion basically, and we went all the way down to 3.24. So basically almost 1 trillion, around, let's say, 900 millions were 900 billions were just evaporated, at least for a while, and it was crazy. So basically 20 billions worth of liquidations happened during this crash that lasted a couple of hours, I think just an hour. And so let's have a look. For example, here, this is on Friday at 6 p.m. So the price here, let's see, we need to go by the hour. Yeah, exactly. It lasted like an hour. So this is this is the one. So Friday, it's crazy. Yeah, like at 10 p.m. It went all the way down to 3.3 trillions, and then it went back up to at least to around 3.7, and then it went up. The market rebounded strongly, especially at the beginning of the week. There were also signs of hope. Many people were selling this crash as a sort of very healthy correction that would allow the market to continue upwards, which is a valid opinion, I would say. I partially disagree with it. I really think it is a sign of exhaustion in terms of the bull market, and so it has to be seen. And now also, if we have a look at the market, so the market rebounded all the way up to 3.9 on Monday. And then it went down to 3.66 on yesterday, and now we went higher to 3.82, and now we are going lower again. So obviously these are very short time frames, so they are very unpredictable. On the 4 hours time frame, we see the price in the clouds, which is a sign of uncertainty. Meanwhile, in the daily, this looks like a bearish trend forming. So, we are below the clouds, and the price rebounded a lot. But I think these liquidations happened also due to manipulation. So we were forgetting to mention this aspect, which is very important. So to LE5, what happened during Friday? Basically at the beginning of the day, if I remember well, so don't take all my words for too seriously, but like give me a margin of mistake. But to LE5 this, they so during the beginning of the day, some whales started shorting the market, also in a hyperliquid, in the perpetual platforms, started to short the market, and it looked like somebody knew something was about to happen. Then, during morning time for the US, Trump hinted at the fact that he was hungry towards China. Okay. And then a couple of hours later, when he hinted at that, the shorts increased, so the markets was started to go lower and lower, but obviously on an healthy pattern, let's say. And then a couple of hours later, he announced 100% tariffs on China, and the markets, especially the crypto market, tanked. And especially alts lost up to 50, 60, even 80%, some of them. So if you have a look at, for example, here, we go to this. By the way, if you see here my portfolio alts, this is something that I have to update, right? So you will see coins that I've not been dealing with for ages. So don't take this as something, don't take these assets here in this list as assets I deal with often. So, but for example, let's take Stark, right? And we can see that it went all the way down to 2 cents. Okay, basically. Yeah, let's say 4 cents, okay? 4 cents. So it was trading around, at the day the market tanked, it was around, it started the day at 15 cents, and then it went down, 12, and now it's about 12 cents again. But, it went all the way down to 4 cents, 0.035, let's say. And then it went up to 0.12 again, even higher. And yeah, but, this means that it lost 90% basically, right? So I don't know the exact percentage, but most assets did a similar pattern. Most alts, especially alts, in the end, Bitcoin and Ethereum didn't lose a lot of value, but most altcoins lost temporarily lost a lot of market cap, and this was also due to the fact that both centralized exchanges and decentralized exchanges, many of them use the auto deleverage feature, which forces users' positions to be closed. So many users found out that their positions, some of them, they were also in profits and so on, but these positions were closed, especially shorts. Right, they were automatically closed in order to guarantee liquidity in the protocols, liquidity in the exchange, and obviously this sparked also some controversy, because in the end, we focus a lot on decentralization, but then if you force somebody's position to be closed, it has a strong centralization dilemma. And it is a centralization dilemma, and it's not decentralized. If somebody closes your position instead of you, or just the protocol, there is something embedded that closes your position. I don't know the details about this. In fact, I'm very also skeptical on how this can work with smart contracts, right? With in the DEXs, but obviously this applies only to, I suppose, only to perpetuals. So obviously there, most of the users deposit, right? So then once you deposit, on the perpetual, even though it is a decentralized perpetuals. I think that the kind of money that you deposit and you trade with leverage and so on, the protocol has power on that, right? So this is how that could happen, I guess. Don't take me for granted, or like I could be wrong. I'm just also kind of speculating a bit. But then, as we were saying, BTC and Ethereum, dumped up to around, in terms of like BTC here. So it started Friday on 121,000. And then it went down to, so yeah, around 109,500. And so it didn't dump a lot, right? So how much is it in terms of percentage? So let's take the opening here. So it lost 11%. So it's not a big dump at all, right? Obviously, it is a big dump because 10% of Bitcoin now. I don't know how many billions is that, but it's quite a lot. So maybe, yeah, quite. For example, if we have a look at Bitcoin, right, market cap, right, it's 2 trillion and 2.2 trillion. So losing like 10% is already like more than 200 billions, right? So it's insane, even a 10% loss. And yeah, so the same applies to it. Actually, yeah, we can also take advantage to kind of speculate on how the price will behave in the coming days and weeks. So as I said, for the time being, the price, especially in the daily time frame, is below the clouds. That could signal a bear market, or not a bear market. In the short term, it could sign a short term bearish trend. And but yeah, the market is very volatile during these weeks. Everything can happen. We also need to take into account the Fed decisions that are going to happen at the end of the month. Powell signaled that he's going to cut rates, but then in 10 days there is also the CPI release, and it seems like inflation went high quite a bit lately. So, there could be changes. Everything can happen. Now we have the peace in the, we have a peace deal in the Middle East. So the war has ceased, at least for now. The hostages the Israeli hostages were released, but now there are already some controversies in the Gaza Strip. All this kind of stuff, right? Where even though something seems solved, it's not being solved, right? So we need to see how the world reacts. Also, there is an economic war ongoing, right, between China and the US. Also, today I heard that China is refusing to buy soya, to buy soy, right, to buy soy from the US, and Donald Trump is very angry at that. So you see. We are seeing this kind of actions in the geopolitical space that are not very, very, let's say, they're not a sign of good omen for the coming weeks. But yeah, let's see. It's not under our control. And yeah, so then if we have a look at the monthly time frame, at the weekly time frame, this is what I've been saying since the beginning of these formats, that the market is overbought. When you see such a trend in the weekly and the monthly, it can go higher, it can continue to go higher, it can start a consolidation pattern and stay on a similar prices for 6 months, and maybe that kind of pattern invalidates the possibility of a serious bear market, right? But still, I still think that in general, risk on assets, gold included, need to calm down a little bit. So we saw the price closing below the 9 periods moving average. So let's see how the price of Bitcoin will react once it goes it touches the 26 time moving average. Sorry, and yeah, so also when this blue line and the red line crosses, and the red line goes above the blue one, that means bearish days ahead. At least a possibility of that. So let's see. Moving to ETH, something similar as well for Ethereum. It went a bit lower than Bitcoin during the crash. So let's measure that. It went down. So let's take the opening. It went down to 20. Here it says 21%. 10% more than Bitcoin, but still, it's not that bad. If such a crash would have happened during the past cycle, for example, it would have lost easily 30%. And this kind of also of crashes happened during the past bull markets, but this was very different. I wouldn't mind too much about this spike, because there were a lot of manipulation involved and a lot of leverage. But still, in terms of signals, maybe what I was thinking is that, the end of these spikes could signal also a potential bottom for the bear market, or maybe a sort of one of the last bottoms. But I think it can go even lower, right? Can go even lower. Prices can go even lower than these levels in a bear market. But still, it would act as a support as well for a while, I think. So yeah, really curious to how things will unfold. And yeah, so today is also a red day for Ethereum. It went back up to 4,300, and now we are at around 4,000. So it will be interesting to see how it finishes the week. So gold doesn't show any signs of wanting to stop this epic, historic millennial bull trend. It's crazy, guys. It's crazy. And it is sitting at around $4,200. Yeah, I think it went above 4,200, right? And then it retraced a little bit, but still, guys, it's crazy. It's crazy. For example, the 4 hours time frame bullish trend, right? If we take the 4 hours time frame into account, we can see that it started in August. This is crazy. A 4 hours trend that starts like 3 months ago. 3 months ago, guys. 3 months ago. And the price here didn't go below the clouds, not even a single day. It is something really rare as well, I think. So it's crazy. It's crazy. But at the same time, I also think that it will have to calm down. Even gold will have to calm down a little bit. I still think it will, it will go down quite a lot at one point. But let's see. Having a look at the dollar index, it's also very important to understand how things could unfold in the coming days and weeks. We see this kind of short-term bullish trend by the dollar index kind of calming down during the past few days, and but it is still above the clouds. So I think it is just retracing a little bit before going higher once again. And as I always said, the higher the dollar index goes, the more bearish the scenario can be for risk on assets, right? So let's see. Also, let's also have a look at the Euro USD pair, as Euro lost some, dumped a little bit in the past 10 days or so, right? Since, well, actually in the past month, it's going down in comparison to the dollar, and it kind of bottomed during the past few days, and now it is entering the cloud. So quite an uncertain situation for now, and let's see how it goes like in the coming days. Let's have a look at the shorter time frames here. It has to be seen if it manages to go inside the clouds or if it retraces at the end of the week. If the dollar index as well, generally speaking, if the dollar goes stronger at the end of the week, which is something possible in my opinion, we'll see also the currencies like the euros going lower again and continuing this kind of short medium term bearish trend. And yeah, so that's all for the charts. Let's have a look at unlocks. So we have a calm week in terms of unlocks, also the previous one, and was quite calm in terms of value being released, also because the value itself of the coins being released into the market were very low due to the crash as well, right? And but a similar week in terms of unlocks is happening today. Around 1 billion being unvested. So yeah, we have some cliffs being unlocked in the next 7 days. We have the 1.7% total supply of Arbitrum being unlocked, and fast token 4.6%. And yeah, so not pretty much to see here. Then in terms of DeFi, it's been a very stress testing week for DeFi in general. And in terms of prices, in terms of protocols, having to deal with a lot of liquidations, right? 20 billions of liquidations. Like obviously, many of them happened in centralized exchanges, but also in terms like for in protocols like Aave, many people were liquidated. In fact, here Aave's founder Stani stated that during the Friday's crash, Aave experienced the largest stress test of its 75 billion lending infrastructure. The protocol operated flawlessly, automatically liquidating a record 108 million worth of collateral in just 1 hour, without any human intervention. Once again, Aave has proven its resilience. And also, most of DeFi protocols acted in a similar way, signaling, that they're getting more solid and solid by the year, by the bear market, by the bull market, by any kind of market scenario. Lending markets are reacting very well to this kind of stress testing situations. So congrats to Aave and to all the DeFi protocols that managed to deal with such a big amount of liquidations in a very good way. So just a quick look at total value locked in DeFi Llama. So here it says around 158.2 billions, almost 1.5, so 1.53% down in the day. We see Aave with a almost 8% loss in total value locked in the last week. The same applies to Lido, Eigenlayer, Binance staked it here, liquid staking assets, Etina 15%, EtherFi 6.6%. Actually, Spark reacted very well to this crash with losing basically no value locked. Quite remarkable. Also Morpho, if we take into consideration that such a big crash happened, these numbers are quite positive. So this is also something I was thinking about. Even though we could have a bear market, I think total value locks in DeFi won't go down that much. This is my own view. So also because now people are more comfortable in holding also stable coins there. So many profits many profits that are sitting in stable coins where will be put to work on DeFi platforms, right? So instead, especially during the past bear market, people didn't trust putting too much money in lending protocols because obviously during the bear market everything can happen, especially in the negative side of things. So even during this, it's always better also to the risk a little bit, right? But still, during this if there will be a bear market soon, we can be more relaxed. We can feel a bit more relaxed in leaving some of our assets there. Obviously, not financial advice, and I don't even know what I will do, so I don't want to tell you what you have to do. Then let's have a quick look at L2Bit as well. Obviously, most L2s lost quite a lot of total value locked. 7% for Arbitrum, Paychain 6.5%, OPMain at 15.6%, Linea 17.8%, ZK Sync Hera 11%, Lighter 10%, Starknet 740, Starknet 9.19%, and Unichain 30%. That's a lot for Unichain. So our red week. A prediction market I wanted to show you about is also this one about the Fed decision in October. And so the one I'm most interested in is the 25 BPS decrease, which is being priced like at 94%, right? So if you bet against it, you're gonna have quite a huge upside. And I was thinking, obviously, it's almost certain that there will be a 25 bits decrease in rates. But as I was saying earlier, there will be also a CPI inflation figures release in the coming 5 days before the Fed decision, which is forecast for October 29th. And I think if I remember well, the CPI date release will be happening on the 24th or 25th. So if the CPE is very bad, if it shows a lot of inflation, a lot of recent inflation happening, Powell could change his mind and he could just skip this rate cut. Obviously, this is something very unlikely, but I was thinking, with gold going so high, also now we're seeing other commodities going so high. Silver touched a top recently. So also, when you go shopping, you notice that, prices are continuing to surge a little bit, not as aggressively as they did during the past, during 2022, 2023, but still they're going higher. So, we could have a surprise here. I'm tempted to put some money here. And then we can move to RWA. So first this one. So in terms of RWA, the total value locked in real world assets, the total tokenized value, let's call it like that. So it's quite unchanged. It even went a bit higher, I think. And we're talking about 33.91 billions. So, real world assets untouched from this crash. Let me see if there are any news worth mentioning in the RWA space. So DWS is stable coins emergence scope payments flash. Yeah, maybe this one could be interesting. So China Merchants Bank subsidiary brings 3.8 billion institutional fund to BNB chain. The top-ranked Asia-Pacific money market fund is now available to accredited investors as a tokenized asset with real-time settlement on-chain. I think China could warm up a lot towards tokenization because it's something that they can also control more than than DeFi, than let's call it illiquid DeFi, right? Um, than average DeFi. And because obviously, if you tokenize a real estate, the real estate is for real, so it has to follow a lot of regulations. So governments like the Chinese one could warm up to tokenization, and this is also a sign of that. Even though I guess that this bank has some freedom, right? So maybe it has it is a subsidiary, so which means I guess that it is not subject to Chinese local laws at least. But obviously it is connected to China, so it means something, right? So I think we could see a lot of adoption in China in the coming weeks and months when it comes to real world assets. So let me see if there are some news that we can cover at last. US Bitcoin and the Ether ETFs rebound as Powell signals rate cuts. Okay, very good. So there's nothing to cover here. Actually, we could mention this, even though it's what is it? So mysterious hyperliquid trader is doubling down on their Bitcoin short. So the one who started shorting the market on Friday, after closing his shorts, he opened the new ones. And the guy knows something. But also, by having a look at the charts, it looks like some short trades could play well at least in the short medium term. So guys, I hope you like this catching up episode. We're gonna see each other back on Friday, hopefully. So I hope you enjoyed this episode. I don't know if you noticed, I also bought a new webcam. So let me know how you find the definition, if it is better than the previous episodes. And thanks a lot once again. See you on Friday. Enjoy your evening, morning, night, whatever. Take care, guys. Bye.